On Here on Bay Radio, Brett Hanson joins us again this week to continue discussing the case for selling UK property. Last week, Brett explained all the challenges now facing UK landlords, and today we'll dive into the issues British expatriates in Spain need to take into consideration. How are you doing, Brett?
I'm doing good, thanks, Howard. What about yourself? How are things?
I'm very well, thank you very much.
Good.
Well, Brett, last week you mentioned that many UK buy-to-let owners are considering moving into alternative investments. What advantages do other types of investments offer?
Well, I think, Howard, that this largely depends on what an investor is wanting to achieve, as there are a number of solutions in which investments other than property could be held in for someone moving to or already living in Spain. But provided they use the right solution for them, then the advantages over property can include tax-efficient growth and or tax-efficient income for both Spain and the UK in case they return to the UK to live in the future. The ability to withdraw some or all of their original capital without penalties or delays, which is a major advantage over property. To be able to invest in sterling and euros, and to be able to change currency at any time in the future. So, for example, if someone has sold their UK property, but do not want to convert the proceeds to euros now because of the current exchange rate, then they can invest sterling but switch to euros in the future, particularly if they're looking to take a euro income. Likewise, they may wish to invest in euros but have the ability to be able to change the money to sterling in the future, maybe because they may go back to live in the UK or because the beneficiary is a resident in the UK. And then there's the ability to invest in a variety of different assets with a good geographical and market spread, thereby increasing the diversification of what they hold their money in and not having all their eggs in one basket, so to speak. I think this is very important, Howard, when wanting peace of mind, especially if the investments are held in a solution and jurisdiction which provides appropriate investor protection. At the same time, the appropriate solutions enable the investor to change the underlying investments as someone's attitude to risk and circumstances are likely to change over time. And then one significant advantage of investing in investments different to property is, and again, this is if you invest in the right solutions, is that you can potentially protect the assets from both UK and Spanish inheritance taxes, and for the investments to pass to your loved ones without the complications and the hassle associated with probate.
What tax issues do British expatriates in Spain need to be aware of, or if they retain UK property, in terms of income tax on retail income, or capital gains tax if they decide to sell it?
Well, as we discussed briefly in last week's broadcast, Howard, if someone living in Spain retains UK property, then the rental income will be liable to UK income tax, but it will also need to be declared in Spain. Under UK rules, the landlord does have the UK personal income tax allowance of £12,570, but rental income above this will be liable to UK income tax, and the tax rates on rental income is going to increase by 2 percentage points from April 2027. So that's 22% for basic rate taxpayers, 42% for higher rate, and 47% for additional rate taxpayers. At the same time, if you are a resident of Spain, then this income will also need to be declared in Spain. For long-term rental income, Howard, up to 50% of the income will not be taxable in Spain, and the remaining 50% will be taxed at general income tax rates. This means this income, along with any other general income, such as pension income, will be taxed at rates starting at around 18 to 19% and increasing incrementally to between 45 and 54%. These amounts dependent upon the total amount of income and the region of Spain you live in. Any tax due on the rental income in Spain will be offset against any tax paid on this income in the UK. If you choose to sell a UK property, Howard, then you need to bear in mind that the full gain on the property will be liable to Spanish capital gains tax. There is no Spanish capital gains tax allowance, and the tax rate starts at 19% on the first €6,000 of gain, but again increases incrementally up to 30% on gains in excess of €300,000. This is especially relevant where the property may have been your UK main residence for many years, and where you therefore mistakenly think that as a main residence it will not give rise to tax in Spain for those years it was your main residence. Unless you meet one of the very few exceptions, the full gains since owning the property will be taxable in Spain, not just the gain made since you've lived in Spain.
And what about inheritance taxes?
Well, Howard, any properties in the UK will be liable to UK inheritance tax regardless of whether you are a long-term non-resident of the UK or not. Now, just to recap on the long-term residency rules. In the past, UK inheritance tax involved the concept of domicile. But now, in order to avoid UK inheritance tax, you need to have lived outside of the UK for 10 consecutive years. By meeting this requirement, your estate will no longer be liable to UK inheritance tax on any assets held outside of the UK, but UK inheritance tax will still apply on UK-based assets. So, in order to avoid UK inheritance tax altogether, you need to have been living outside of the UK for 10 years and not have any assets in the UK. Any assets held in the UK will always be liable to UK inheritance tax, including pension funds from the 6th of April 2027. So, if someone is living in, say, Spain, or thinking about doing so, then if they sell their UK property and invest this money in something outside of the UK, these assets will be free of UK inheritance tax once they have lived outside of the UK for 10 consecutive years. Likewise, if they keep these investments outside of Spain and they are left on death to non-Spanish tax residents, then these assets will also be free of Spanish inheritance tax.
Finally, Brett, let's say that a British expatriate here is selling UK property and wants to invest their funds in stocks and shares. What is your advice to them before they buy any new investments? What do they need to think about, and how should they approach building their new portfolio?
Well, first of all, I would recommend they speak to an experienced, qualified and regulated advisor local to them, who can first advise them on the tax implications in doing this and any other things they should first consider. I would also recommend, Howard, that they speak to them about their circumstances and objectives. The advisor should do a thorough assessment of their attitude to risk in order to make sure that the investments they are considering investing in are right for them and that they fully understand the potential volatility involved in investing in these assets. The advisor should then come up with the solutions which will meet their circumstances, objectives, and attitude to risk. The advisor should then put in writing a comprehensive financial plan outlining all of this, along with the fees, ensuring that you have full transparency when it comes to the fees. Make sure it is clear on what fees or penalties there are if you wish to take a regular income or encash some of your capital, as there are solutions out there where there are no fees whatsoever to do this. As part of this process, Howard, the advisor should also look at both the financial and estate planning so that not only can you minimize tax on the solution during your lifetime, but also legitimately minimize inheritance tax or Spanish succession tax in both the UK and Spain.
Always interesting and up-to-date. Thank you very much indeed. And of course, our listeners can get all the information at the Blevins Franks website.
Yes, Howard. For anyone that would like to contact us, then it's probably best to go to our website, blevinsfranks.com. There's also useful information, tax guides, and more information about us, as well as you can see the options of the offices that we have and where the most local office is to you to be able to contact us.
Thank you. We'll catch up in a few weeks.
Thanks, Howard. Take care now.